Yes, welcome to Fully Booked. You're here with myself, Mace.
Myself, French.
And myself, Andrew.
And for this season, we switched the settings back up. You asked for it, we brought it back. You're getting visuals with this season. So if you're listening to us on the Spotify, on the SoundCloud, on any of those audio platforms, you can now check out the visuals too on YouTube. This season, season 22, we decided to take it back to things in society which are causing people pressure, people to talk about, the economy. We're reviewing a book called The Money Ladder by Franklin Asante. You might have seen this guy on various podcasts, well-known platforms, and he's documented that he would be writing a book. As soon as we saw that, French, Pock, and myself, we said, you know what? Let's get the book. Let's review the book. Let's bring it to the viewers. Let's bring our thoughts. And hopefully, if you're watching or listening out there, Mr. Franklin Asante, come on the podcast and talk about the book. Right, there's the intro, boys.
Solid, boy.
Them demands there. No?
Yeah.
All right, cool. Let's kick it off. The Money Ladder. Before we start, I've written down notes or whatever and whatnot. There's a part of the book that he talks about his journey. Did anyone want to talk about that before we actually get into the nuts and bolts of it?
Yeah, I can give a brief explanation for what I've read. So what I understand about Franklin Asante, he didn't come from money, or so he proclaims in the early stages of the book. And he says that he got into what's the job title that he taught? What's the job title? Financial advisor. He got into financial advising just around the time of when the economy took a big hit. So I think around 2008. Yeah. And he said it was almost like a baptism of fire, I think is one of the terms used to describe it. So he talks about getting into financial advisor at that kind of early point in his career and almost walking through. He used some great, is it euphemisms, the terms you use? He used some great euphemisms where he was saying about, imagine walking into a building in your smartest attire, but then all the walls were on flames or something like that he refers to. So yeah, he's a financial advisor. He got into the game in like 2008 and has worked his way up to the point where the knowledge and wisdom and the clients he's worked with and he's gained, he's now in a position where he wants to share that wealth and that knowledge with us through the medium of a book, which is why we're reviewing the book.
Explained very well.
Cool.
No, I thought it was. I explained it very well.
Did you have a different take?
No, I didn't have a different take because I was actually unsure whether he had gone through what you just said, but obviously he has. And I was going to ask actually, does he say at all how old he is?
I haven't got there yet. If he does,
I know roughly he might be our age or maybe a little bit younger. I'm gonna have an assumption, but like
I mean, I would assume the 30s. And the reason I say that is if he's got into this industry in 2008, one would assume he's perhaps studied to get there, finished uni, maybe a year or two gap year, whatever it is. 2008 would make, like, say he's graduated or whatever. We're 16 years down the line now. Graduate 21, 22, so he must be 38ish. That's how I've worked that out.
Cool. In fact, sorry, no, I think my question was actually what age did he get into the financial industry, or what age was he when he at 2008? But we've all read the book.
Him like he would know.
I know.
Like we all read the same book. All right, let's just jump in.
Let's jump in.
All right, building foundations. The initial phase of building wealth is the hardest because this is usually where you're required to do most work. The early part of building wealth also requires the largest accumulation of your own money and therefore puts significant emphasis on your ability to earn, save and invest. Once you make it past the initial phase, you'll find the rate of growth starts to accelerate and compound effects becomes far greater. For example, making your first 100k is difficult. However, once you break past this point, a 10% annual return on 100k gives you a far greater buying power than a 10% return on 10k. Yeah. So you need to practice that of being disciplined with money, which in modern terms is often referred to as having good financial literacy. And that's on page 25. When did you become aware of financial literacy?
I'll answer first, P.
Yeah, cool.
I'll be honest, financial literacy, I became aware of it from an early age, bro. And I've explained this on other seasons we've done, but it's probably most poignant now that we're doing a book on money, wealth, maintaining wealth and all the rest. In my household, from like as early as I can remember, the financial aspect or element used to crop up in a way whereby I would hear my parents often talking about, the lack of money to pay a bill or pay bills, You know, just making sure there was enough there. Like I've said this before, I was never at a point where I've been homeless. Or I was never at a point where I myself felt the negatives of not having enough money in the house, always fed, always clothed, all the rest of it. But I could definitely overhear the conversations. I definitely seen those letters come through, which are not the right color, to be coming through the front door. Definitely bills getting missed and getting delayed in terms of payment. Definitely people helping out by borrowing parents' money and whatnot. So from at that point, I realized I kind of clocked that, like, okay, a lot of like heated debates, let's call them that, in my household, you could the kind of, they spawned from the lack of money, or lack of, maybe even you might say, financial education in terms of how to use the money that they did have. So I had an awareness of the need for money and the need to make sure you use the money for the kind of right things, to make sure that you didn't have these stresses of like red letter days and bills and all the rest of it. So those are the early elements. In terms of like later on, and really starting to get to grips with the financial element of kind of financial literacy, should I say, truly and strongly believe that experience is what has helped me, rather than a learning curve in terms of classroom based learning. So just experience of moving out, experience of having to pay rent or pay a mortgage, experience of your own bills, experience of when your washing machine breaks down. All those things of what have um, allowed me to become more literate, more than anything, rather than saying learn it in the classroom, which I really can't recall learning too much apart from, you know, general business study terms. One of the things I know in the book, there's like an introduction, like a glossary of terms type of thing. And a lot of those terms, when I was reading through them, a lot of those terms I've actually heard of or know of. Might have been one or two I didn't fully understand. I didn't previously understand what either they
APR.
they stood for in terms of the actual words, or B, the actual proper explanation. But I've heard of pretty much all of them, and that's not from school. That's from just everyday living, if that makes sense, and gradually seeing how these things could affect me. So I'll say with financial literacy, it's been a steady learning curve, which has probably stepped up a pace in my adult life as I've gone through the experiences. But I was first aware of the need for financial literacy from a young age because of the experiences in my household.
What would you say? And we'll get back to EP, but like, what would you say financial literacy actually is?
Good question, because I know there's a definition which I can't remember. But for me, it's financial literacy is understanding. I would say it's understanding finances in terms of financial literacy, in terms of your money coming in, your money going out, what you're using your money for, um, borrowing, bad debt, credit. I think and I know there's a proper definition, but probably I've stepped away from, but it's an umbrella of a multiple things, and all of those things for me come under the umbrella of financial literacy. Understanding your finance, understand your income and outgoings, understand how money could work better for you, understanding how to invest money and not to invest money um based on research. So it's like there's loads of different little things that spawn off from an umbrella which is headed up by the term financial literacy.
Do you know? So you said a lot there, in a good way, which made me think as well. Because I think in listening to the books, I'm currently listening to it rather than reading it. And I think with all good books, actually, they allow you to reflect, kind of as to like where you are or what you're doing and some of your actions, certainly in the past. And based on what you said moments ago, as to your interactions or even listening or seeing your parents, I would say, I mean, actually, that's not the first thing that actually came to mind, but actually that is quite poignant in terms of seeing my parents' interaction with money and stuff like that. And it's funny, actually, in discussions, certainly in recent time, in terms of like discussing my dad and other families discussing my dad, he was very, very good with money. Because he was an accountant, so like he come from a banking background, etc., etc. So he was always good with money. It's a shame he didn't pass it on to myself. But I mean, like from that, I would say the discussions or certainly the problems maybe inside of my house in terms of maybe, let's say, confrontation between my mum and my dad. At some given point, I had to start not physically paying the bills in terms of putting out my own pocket, but I had like the rent book, etc., and I had to take the rent book to the post office or pay bills to ensure these sort of things were done for whatever reason, obviously in the household and all that type of stuff. But very similar to yourself in terms of seeing conversations or heated conversations, you understand, okay, cool, there's this thing called money, which can cause debate in some respect. As to financial literacy, I'm not even too sure, because I would even say, and I guess it's a very easy answer to spill, it's still evolving in some respect, you know what I'm saying? Yeah, I'll say it's definitely still evolving. But also, as to, let's say, like it initially having some form of impact on me, I'm not too sure. Yeah, I'm gonna say, when I say fairly recent, I'm not talking about like over the past year or two. I'm talking about over the past, say, 5-10 years in terms of having a real impact. But I'm gonna say the word is quite recent in some respect. You know what I mean? In terms of like financial literacy. But I think my journey is still quite ever evolving. And I guess obviously, as I mentioned with the book, and I'll kind of pause in just a moment, is I feel it's allowing me to reflect based on my interactions with money. But you mentioned paying for bills and all that type of stuff. Like, we went to uni, so like my interaction with money has never been poor in the sense of I'm going to, if I have done this before, but I'm not going to leave myself hungry at the expense of doing something stupid. Do you know what I'm saying?
Like what?
Buying clothes. Do you know what I'm saying? But the reason why I said that is because, of course, I've been through difficult times very recently. I bought like 2-3 pair of shoes like only like a couple of days ago, which is something I shouldn't have done because I've got other things to do. But I told myself to treat myself, go do that. Do you know what I'm saying? So I was more than happy to do so. But I wouldn't put myself in a situation, or I don't think I've done so very often, where I'm going to buy shoes, trainers, clothes at the expense of paying bills, etc., etc. But in my own book, I know I talk about silly stuff of that nature. Do you know what I mean? But I still think there are parts of myself which definitely need to evolve and develop in regards to financial literacy. But I don't want to say too much. It's mad because I actually feel there are things which I 100% agree with him, but they're in conflict with the way I may think in some respect. But two things, I think, as you said before, can be right at the same time. So yeah, I'll leave it like that for now.
That's what to say. Financial literacy as well. It's all about the terms, the different terms that you use when speaking financial jargon. So understanding that. That's the other thing I forgot to mention as well. You're going to give us the actual breakdown now?
Nah.
Okay. Leave us hanging.
Now I was just going to ask as well, I've not even written this question down, but it's more of a follow-up question. Either of you get any kind of financial literacy teachings or guidance from your parents or older siblings or anything like that?
No. Nah, the only thing I got, I got was kind of save your money, don't spend your money. Like there were from a young age, and it wasn't even said as such. I've always had like a penny jar or a 5p and 20p jar to just put money in. So it wasn't actually said to me, but I've always had those things, like a little jar, which like I could put little change in, or maybe my dad or someone would put a little change in. And it was always kind of like with the, remember when you've got like penny jars and stuff, without realizing it, it's like a savings account, because you're just constantly putting in and you shouldn't be taking out, right? Like, it's like, okay, little change goes in there. So it's like putting money aside that you're not touching or spending. And without, maybe subconsciously, you're not realizing it, it's teaching you to kind of save money and not spend. And then my mum's a big, whatever, you know, like saying this camera, a big cheapskate. So she was always the type, and always has been, to hunt for deals.
Yeah, so I think that's normal in our community still. Well, it was back in the day at least.
Yeah, so even like it might be, and I remember this happened to me once whereby I think I might have been about 15 or 16 or something, and I wanted a pair of trainers. I might have been 14, I can't remember, or 13, I might have been a little bit younger. And I remember like there was a pair of trainers I wanted, and I remember I think my mum saying to me at the time, don't buy them, you'll find them cheaper somewhere else, or something like that. You'll find a pair you want somewhere else, like cheaper. I remember saying that. I remember not listening and buying the trainers, And I remember like 2 days later or something, either the same trainers or something similar was like cheaper. And I remember, and that never left me. Like my mum told me not to buy these trainers, you'll find them cheaper, or you'll get another pair cheaper. And then that kind of stuck as well in terms of like, like that, what do they call it? Like compulsive something. What's that buying thing? They call it like a compulsive buying or something like that.
I
I
think
think that
you
is
mentioned it.
anyway, I think that is very
He
similar.
refers to like a Greek term or something about like
Yeah,
where you've got, yeah. But like, I remember that kind of stuff with me. Like, don't just have that kind of compulsive habit. As soon as you see something, buy it. So even you lot know anyway. I've told you I can't even tell you what the latest trainers are to buy, because if I go online, I'm going to the sales section, bro. And
First,
whatever is last year's was last year's must haves, it's for me it's this year's. And the crazy thing is, by the time I buy them and I put them down, I wear them 6 months later, people are like, right, where'd you get those? And they don't remember, bruv. They were out a year and a half ago and everyone was rocking them, but I'm just rocking them now because it's that time.
Cool.
yeah, you were talking about where do we so wait, so what was the question? So apologies.
The follow-up question was basically, have you had any teachings or guidance from from parents or older siblings or anything?
No, I was thinking about something you said. Yeah, probably very similar to yourself. Like my mum more so probably did tell me don't spend your money, etc., etc. But I was thinking to myself, like I'm thinking about myself as to some of the things I just mentioned, which was buying I actually bought 2 pair of shoes, yeah, last weekend or wherever it was. And the Dr. Martens I was telling you about, I probably bought them probably a month ago. Do you know what I mean? Or anyway, and I think that comes from a lack of actually. I'm not saying like deep down inside, but I think that comes from a lack of. And when I think about when I was younger, in terms of when I had money, I was spending it, and not to say that I really needed those things, but you want to look nice, etc., etc. But I think more so it came from a lack of. I can't really break that down any further. I can't think of a way to break it down, but that's what I think it came from. And in so, and actually speaking to some of the things in the book, when I'm listening to it, I'm thinking to myself, because I know he does talk about this, your pot needs to be big enough to put into several different jars and so on and so forth. But generally speaking, when I've had money, my pot's not being big enough. I'm talking about from younger. It's not being big enough where I can start moving it in different pots. And because of that lack of, you're just spending kind of like straight away. And it could have been on sweets. Do you know what I mean? But I'm talking about, generally speaking, that's a trait and a behavior that's kind of like carried on throughout my life. Do you know what I mean? And I think my behaviors and patterns have changed, but there's still 1 or 2 things I think, generally speaking, I think I need to tweak. Yeah, but it's mad actually, because I was thinking about my dad as to the question. And it's funny because my brother Michael speaks about how he probably shares very similar habits and traits of my dad. It's mad actually because they wouldn't have lived in the same household for a very, very long time actually. So where or why that happened, I'm not too sure, but we have spoken about that before. But as to myself, I'm just thinking that like, and it sounds really stupid. At that point, he would have been out working like a madman. Do you know what I mean? Yeah, like he was in his cab from like forget the banking stuff, but like in terms of in this country, he would have been in the cab from early 90s, which would have mean I would have been just say 5 up until like 8, 9, up until, do you know what I mean? And just working. So I wouldn't have seen him as much, you know what I'm saying? But in reference to Michael, like he might have slowed down at that given point. Do you know what I mean? And had more time to spend with him or for him to see stuff, do you know what I'm saying?
Okay. For me, I don't. Similar to yourselves, Mace, I think I was aware of finances from young, like just because I knew there was this. I may have said it in a previous season when we've spoken about money, but I was very aware of money being a thing of this world. Like I knew you had to get it in order to get things. It was made very abundantly clear that not to say there wasn't enough of it, but it needed to be got essentially. So, but in terms of actual literacy per se, in terms of knowing what outgoings, incomings, borrowing, savings, that's probably in my latter years understanding what financial literacy is. Whereas when I was young, I was given a piggy bank, so I knew how to save. But that was again, like you said, you're not. It's not an obvious thing that you're doing it. It's just like it's almost like a game. Yeah, it's like, oh, this little ornament I put coins in, but I'm not thinking I'm saving it. I'm just putting money into it. And again, you may do well. I know I got like what is it?
What do you mean, like ice? No.
Not nothing like that. But like pocket money and things like
Oh
that.
yeah.
Doing like little chores and stuff.
I used to get that. Yeah.
So you could go and buy like a little comic book or whatever, whatnot. So if I didn't spend it, then I could get double next time or whatever, whatnot. So I was becoming aware of it in that sense, but still not. There was no direct teaching of if you save up your money and put it into this and you put it into that. Because I got a bank account when I was quite young.
Yes.
I remember having like my little red book and stuff.
Yeah,
and I could see, like there's
money,
money in there, but I still didn't have a full understanding. So there wasn't no direct teaching, but I remember being praised if I didn't spend money, if I had the money. Like if my mum, so say if I got sent out to go on like, you go on a school trip and your mum might give you a £5-10 to go spend at the end of the day, whatever, whatnot. And certain times I'd go and I didn't really want to buy anything just for the sake of buying it. So I'll come back with the money still. My mum would be like, oh, well, you've done well, like you didn't spend the money. But for me, it wasn't a case of, like I appreciated the praise because it's like, oh, I've done something good here. But it was just like, I didn't really want nothing. Like all the things that was like, you get the candy and the bullshit kind of toys in there. I was like, I don't really want any of that. So I'll just keep the money. So I just had the money on deck still. So for me, it was just like, oh, I'd spend it on something else another day. Not realizing those are almost seeds to, I guess, how I spend money later on down in life.
Yeah.
In terms of not just buying anything at any time.
Randomly.
But yeah, I didn't have any direct teachings, I would say. I think I've pretty much learned a lot from myself, just through, like you said, through experience and living and doing things like that. But yeah, we'll crack on and we'll find more about financial literacy. So wherever you are in the journey of improving your financial literacy, you're not alone. A global study by Stanford and Poor revealed that 2 out of 3 adults consider themselves to be financially illiterate. This is proof that there is generally a lack of confidence when it comes to people handling money, and yet most people go through this life carrying this burden alone. It's on page 26. In very simple terms, financial literacy is the ability to understand the concepts that govern the 4 pillars of handling money: saving, investing, borrowing, and spending. Once you understand these concepts, it's then about being able to manage your money in a way that gives you access to the best available choices in order to meet your financial goals. Like most things in life, if you can understand that the rules of the game, you automatically improve your chances of winning. Are the rules to money equal to all?
I'm going to say no, but I don't know if that depends on your starting point. And I guess if we're going even like yesteryear, obviously certain ethnic groups probably couldn't even have the accessibility to borrow money and stuff like that. Do you know what I'm saying? So, like no, like do you know what I mean? In some respects, and even like down to, it's crazy actually, because I guess like some of our peers would have had better understanding and knowledge of financial literacy from a younger age, depending on obviously their background in terms of, let's say, how wealthy their parents were in some respect. You know what I'm saying? Those parents might have had those conversations a lot younger with them. Do you know what I mean? Yeah. So yeah, I think the playing field is definitely different.
I'm gonna agree and disagree with you. I think you hit the nail on the head with the starting. I think the rules are equal to all, but it's the starting point that's not equal to all. I think you hit the nail on the head with the starting point, but I think the rules, because the rules are there for everyone to play the game.
Yeah.
But where you start from is completely different.
That's exactly what I thought.
Yeah. Okay, but when you say, I mean, and not to get too deep into it because it's not, I guess, not that deep in some respect. But when you say yesteryear, things were a little bit different in regards to your ability to access money and stuff like that.
Of course, the rules are the rules. Like the rules don't change for anyone. I think, like May said, I think the knowledge and that access to knowledge hasn't always been there. So therefore, we couldn't start the race when everyone else started the race.
Mm-hmm.
But the rules are still the rules. Like it doesn't change. Like the money doesn't see the color of your skin. It doesn't know the background. It doesn't know all these other things about you. It just, like, compounding is compounding, no matter who you are or where you come
I get
from.
that.
So these are just standard rules of money, but that the knowledge of money and how to gain it and how to utilize it, how to compound it, they remain the same.
Of course.
But it's just not having that knowledge is what what you're referring to in terms of being on the back foot, so to speak.
Yeah.
You hit the nail on the head, because I got a prime example when you said about starting point. You said something else, peers. You mentioned something, and straight away an example came to me. There's a guy I worked with about 10 to 12 years ago, and when I met him, maybe longer, maybe 14 years ago, let's say, yeah. When I met him, I wasn't surprised because of the ethnic origin of him. Which is mad to say, but it doesn't surprise me. But he told me he had, like, at the time, I think he might have had between 4 and 6 properties already. And I said, whoa, but because he's only like a school year older than me. So I was like, what? Like, he goes, yeah, I got my first one out. I think he said 20 or 21 or something. He goes, well, you didn't know about the 100% mortgages? I was like, huh? He goes, you didn't know about the 100% mortgages? I was like, brother, I barely know what mortgages now. Like, I didn't even really know what a mortgage was. Do you get what I'm saying? I didn't have a home or nothing back then.
Yeah.
So then he was like, yeah, at one point, literally, he goes, in certain banks, they were giving out 105% mortgages. Essentially, they're paying you. Yeah, they're paying you to go and own a house, to go and get a house. It goes, 100% mortgage, you just have to show proof that you could pay it back. That's all you had to do. You didn't need no deposit. Go and get your home. And then obviously at that point, that's when appreciation was quite big on your properties and that. Laughing, bruv. The brother had like, I don't know. He actually now, he's got his own estate agency. The car he owns, or he recently owns, it used to belong to a famous footballer that played for Newcastle. It was some Lamborghini or something. Bruv, I saw him about a year ago. Like, a few of us met up. And he had, I can't remember what, like either Ferrari or Lamborghini. It was like, yeah, this is such and such old car. Like, so, but it just goes to show about the playing field and the access to knowledge. And he's not, well, I wouldn't say he's from like a wealthy background, but he definitely had the acumen and the knowledge from young. This is where you need to be looking to invest or get involved in. From young, he knew that. Brother, I didn't even know. See, when man went college and uni, I didn't even know what the hell I wanted to. I didn't even, brother, think, should I go uni or not, mum or dad? Like,
brother, I didn't get my first credit card until I was in uni.
Yeah.
And even when in uni, I didn't use it. Like, I didn't use my credit card.
Yeah.
Until I left uni. I didn't know about
building up
credit and all that. I didn't know about that until after I left. But I remember when I went, I think it was Freshers Week. You know, you have Freshers Week.
Yeah.
Just signing up to bare things and whatnot. So, yeah, I got my credit card then, but obviously I was heavy in cash those times. So I was like, I'm not using this credit card because I've always heard bad things about credit cards.
I never had a credit card in uni, so that was one reason.
I just had it there because I just signed up to it and I got like a free camera or something like that. And I just had this credit card, but I didn't know what to do with it. So I just left it to where it was. So again, knowledge, not knowing about your credit, not knowing how to use credit cards, not knowing... I didn't have none of that knowledge. I had to teach all of that myself. I had to learn that myself, or among my peers that are also learning at the same time.
Exactly.
Again, comes to access to knowledge.
Exactly that. Same again, bro. I had a credit card for years and years. And even it's only in the last, like, let's say 18 months to 2 years, I've even learned, why are you using certain credit cards that give you F all back? Use a credit card where you're getting little things back, whether it's like, I got a certain credit card, if I spend like a certain amount on it, I'll get a voucher to go do food shopping. Okay. Or another one I've got now is to do with the airlines and trying to But I was using the same dead credit card for years, giving me nothing. Like, certain credit cards give you rewards now. It's even all that. Even changing my standard current account. My dead account was giving me nothing, bruv. And there's all these accounts. Switch to us, we'll give you 150, we'll give you 250 overdraft, we'll give you...
I'm bad at that stuff.
Brother, no, that's why, bruv, I switched up. I've switched up.
I've done it a couple times, but I should do it every year.
Money, brother.
Like, realistically, I should do it every year, like, in terms of...
You should, bruv.
But and I've been loyal for no reason. Bruv, and again, it's just because, again, knowledge. It's not understanding.
When you say it's a lack of... So not a lack, sorry. Isn't it hassle?
This is what I was just about to get to. See, before you used to think, rah, man's got a phone.
Because you said this in a WhatsApp
This
group.
company, thank you.
So
This company. Brother, the one I got now, I thought they was telling Porkies. I was like, we're going to do everything for you. I said, I don't trust you. You're going to miss something. I even done my own little checks, make sure, because I said, you're not gonna damn fuck around, I ain't gonna get paid this month. I swear down, that's what I thought. So I said, I'm gonna even check with my own work thing, see if it's done. I swear to God, everything they done, everything in the back. I said, how are you gonna do that? My work's probably gonna contact me and say, yo, did you tell them? They done everything. Everything. They done it all. I said, all right, cool. This AI thing's real.
Oh, AI? Okay.
No, I don't know.
Okay.
No, but it's at a point where they can just do it.
They can just do it in the background. So when I saw that, I said, all right, cool. But I think I've done 2 or 3 switches, and I've made money off switching. Do you get what I'm saying? It's worth it.
Okay, because I mean, when you sent it, not that I had any negative thought about it, but it sounds like moving house. Do you know what I mean? So like, yeah, you don't need to be doing all that. Do you know what I mean?
No, it's quite quick. So when I've changed my credit cards over and whatnot, when you can change the balance and all that, it's quite seamless. Like before you do it, you think it's a bit of a task. It's not. It's quite easy. And to be fair, I've probably not done enough switching just out of laziness. I'll be honest.
I haven't. I've only in the last, as I said, last 12 months, I've said, nah, man, like, I've had money sitting in accounts doing nothing. Nothing. And all I got to do is make a phone call or send an email, and you're telling me I can make a little £200 here or £100 there. At least it's doing something.
Yeah,
Do you get what I'm saying?
always
It's
go
doing
back
something.
if you feel some kind of
That's what I'm
loyalty.
saying.
Like if you, I don't know what the terms are, but you can go back a year later or a couple of years later, and if they're now offering some, because that's what tends to happen. They'll offer you another deal to come back. So
that's exactly it.
We shouldn't be loyal towards any of these banks.
They're not loyal to us, bro.
Absolutely.
They offer you dead like savings interest, and they're using your money and they're making double and all them kind of things, bro. They're not loyal to us, bro.
All right. So with that being said, where would you rank your strengths 1 to 4 on the 4 pillars in regards to saving, investing, borrowing, and spending?
Saving, investing, borrowing, and spending. Saving, investing, borrowing, and spending.
Where would you rank your strengths 1 to 4?
I got it.
Oh, 1 to 4. Okay.
So weakest is 4, strength is strongest is 1.
Yeah.
Saving, investing. Investing is my weakest. Investing is definitely my weakest. So that's number 4. Saving, borrowing, and spending. The last couple months I've spent like crazy on my credit card, but usually that's one of my strong points.
Okay.
Usually that's one of my strong points. So I'm gonna put what was it? Saving. I'm gonna put at number saving, investing, at number 1. When you say borrowing, do you mean borrowing in terms of I ain't got no money, I need to borrow? You're talking about borrowing to invest in something, if that makes sense.
Either could be both.
All right. Borrowing because I ain't got no money. That's I don't need to, like, I don't do that basically. If I haven't got it, I'm good at like not having to need to borrow.
Yeah, but you can. There's good debt as well.
That's what I mean. I'm not good at good debt.
Okay.
So I'm not good at. So I'll put that at number 3 if we're looking at it like that in terms of borrowing, which leaves me at spending at
saving.
Yeah.
And investing.
So that I think what have I got left? Investing 2. No, investing I was at 3 or 4. And I can't remember where I was at, bro. I'll be honest.
What did you say for 4? You said borrowing, right?
No, I didn't. So what have we got? No, it's investing.
Investing at 4.
Yeah, that's definitely at 4. Yeah, cool. But I probably could have done loads more of the time. I could have gone clear probably, like if I knew what I was doing with my money from 10, 15 years ago.
Yeah, but we're here now.
We're here now. But investing is number 4.
Yeah.
That's probably like the weakest part of me. Saving, borrowing, and spending. Borrowing in terms of good debt, number 3. Spending, number 2. And number 1, I'd say saving. I'd say saving. But with saving, it's not like, man, I'm not good with saving and making my money work for me. I'm just good at like saving a bit of money for a rainy day. Does that make sense? Yeah. So that's why I'll get it.
Cool. So now I wanted to write this down because
what was the question again?
No. There was a lot there in regards to like the order.
You said a lot. What was the question again?
That had me thinking.
No. Okay, cool. By the way, these could easily switch.
Go on.
But I want to start from the bottom actually. I want to put saving in the bottom. And the reason why I did so I'm gonna say spending and saving, but saving is at the bottom and I put spending just above it. And the reason being is because
say that again.
I don't know.
What's 4?
No, 4 is saving.
Okay.
All right. And I put spending just above it. And
Okay.
the reason being is I think, obviously my spending out, my spending's quite, it's quite out there in some
Jammy Dodgers just pop up.
No, nothing to do with that. So I spend a lot. But the thing is, I think back to like some of the things he says in the book, I guess your pot has got to be big enough in order for it to kind of like spill over into other pots in some respects. So I just feel like my spending or my outgoings in some respect definitely affect my ability to save. But I don't necessarily think I don't think I have a bad habit in terms of, I don't think it's a real massive problem in terms of saving. I think it's a case of if I had more money to save, then I would do that. Do you know what I mean? Like very recently, I was putting money away in regards to going to Ghana. Do you know what I'm saying? I was putting money away, and obviously I'm not going to Ghana Christmas. So I was like, I've just boom, that money's been spent. Do you know what I mean?
New pairs of shoes and a leather jacket.
Yeah. So boom, like I mean.
Not going Ghana, quick.
So spending for you should be number 1.
But in terms of good, or maybe I've got this wrong way around. But anyway, borrowing. I don't think I'm a massive borrower, so I'm not out there in like not. I need like so recently actually I borrow money in regards to doing a course. If I'm going to borrow money, I'm borrowing it for a real reason. I'm not borrowing it to go on holiday or things of that nature. Do you know what I'm saying? And then investing, I put invest in 1, and it's not that like I've got massive pots here, there, and everywhere, but investing is something I'm quite passionate about, generally speaking. And I feel like a lot of the money I spend actually is investing in myself in some respect, whether it's in the markets, learning to do the markets, or actually investing in things that I genuinely want to do. That's where a lot of my money goes. You know what I'm saying? And that's where a lot of my money goes. I won't continue. I'm sure we'll probably cover some other bits and bobs somewhere down the line. That's what I think it is. I think that's my ranking.
Okay.
Where's your ranking at?
I would say number 4, borrowing. Good or bad. Because there's been times when I've gone to take out money to invest in something else, but I didn't pull the trigger on it. But there is something in the pipeline that I will. So as it stands, I would say 4, but I have intentions on changing that.
Okay.
3, I would say spending. Then I would say investing number 1 and saving number 2.
That's good. So those are your strong points, investing and saving.
Yeah.
That's very good.
Yeah.
That's very good.
Yeah, that'll be it. Probably number 1 would be investing, then number 2 saving, or switch either one of the 2.
Okay.
Because I've got things in place where it just automatically saves and invests.
Yes.
And I've just set it up now, so I don't have to
think
actually do much. I can just tap a button here and there, and it. So it's automated. Yeah. But that may change over time in terms of learning new things in regards to borrowing and things like that. That's definitely something I want to look into. But as it stands, 1 to 4, that's where I'm at now.
Interesting.
All right, so we're going to move on to budgeting. Being clear about where your money is at all times is the best way to prevent unwanted surprises. If you can't see where your money is going, then your money definitely can't see what you're trying to achieve with it. So to provide you with some clarity, I'd like to introduce you to a very known strategy called 50-30-20 rule. Before we get into it, was anyone aware of this rule?
I feel like I've heard of it before, but that's what I'm going to say. I feel like I'd heard it when he said it. I was like, I'm sure I've heard of something similar to that before, but I might actually have heard of it from you.
Well, it might even come from him because obviously we've seen him on different other platforms as well.
That's a good point.
Yeah.
I've got another one, but we'll get into that in a minute.
I've heard of it. Yeah.
Yeah. Okay. I wasn't aware of it, to be fair.
That defeats my point. Can we just cut?
Because I'll tell you.
It might be another ratio.
My ratio is a different one that I've explained, so you probably heard me say that one. But the 50-30-20 rule is a budgeting method that is widely attributed to the US Senator Elizabeth Warren and her daughter Amelia Warren Tiyagi.
Mm.
I know I'm saying that wrong.
It's all right.
Tiyagi or anyway, and it's explained in their book All Your Worth, the ultimate lifetime money plan. The authors place an important focus into the three main buckets: things you need, things you want, saving or repaying debt. That being said, what bucket would you put your OnlyFans subscription into?
That's question for you.
Not me, boy.
I'm not avoiding when it comes to this question.
Definitely
I'm
not
not
me, boy.
avoiding. I think that's a question for you.
Definitely not, boy. You go to
Question for
you go to the fully booked socials.
Yeah.
You're gonna see Link Up TV, Grime Day. You're gonna see
That's question for you. That's question for you.
Definitely not me, man.
Alright, no, I'm playing. Do you follow any budgeting systems at the moment?
No, I don't think I'm systemized like that. I mean, I understand what's coming out and when and all that type of stuff. Like I've got not a spreadsheet, but like for example, notes when I know when things are coming out and stuff like that. But I don't think it's systemized maybe as he's kind of like outlining in the book. And I probably need to take some time out in order to do that type of stuff. Do you know, sometimes they say you need a life admin or that type of stuff. I don't think that's on the top of my priority in terms of life admin. I'm often thinking about other things, you know what I'm saying? And even like speaking to the book, I'm often thinking about how can I make the first pot, how can I make that bigger? Do you know what I mean? That's what I'm thinking about. How can I make that shit bigger? Do you know what I mean? So I'm often thinking about that, do you know what I'm saying? And it's weird, and I don't know if it's a case of I'm not gonna do the thing I think differently than anybody else, but like because everyone's thinking about how they can make more money in some respect, but I spend so much time investing in myself and all that type of stuff that like other pots in regards to the 50, 30, 20, you neglect them. And in fact, that's what I'm saying actually, you know what I mean? In terms of I have notes, but I haven't paid them enough attention I haven't paid them as much attention as they need, particularly as we get a little bit older, because those things become obviously a bit more important, do you know what I mean?
How about you, Mosh?
Do you know what? I don't have a systemized approach. I kind of do and I don't. It's like, you know, one of them ones where it's not written down. Like,
Okay.
So literally the way I've set up all my outgoings towards bills, household outgoings, apart from like obviously the odd shopping, like food shopping and that, is to come out within the first couple of days of the month. So I know, because I know I get paid I think it's typically the last day of the month. By the first, let me know for this month. I want to know everything you're taking away from me, so I know I've got to work with for less than a month. So I've set all the bills and everything is set up. You leave my side first, second. I can deal with the rest. So that's the only thing I would say, and that was a purposeful setup in that way. I don't want things coming at 7th, 15th, 22nd, 8th. Have it all come out. At least I know what I'm working with. So that's the only thing I would say. But I haven't got and to be honest, my partner's got that on a spreadsheet, but I told her do it like that so we know what we're working with. But there's nothing else in terms of like, cool, this amount goes. What I do have is, as you look know, I've got my secondary source of income. That goes, and I've said this before, that goes into a separate bank account. So typically that's the account I wouldn't touch. But as I said, the last couple of months I've been moving mad with the credit card, so I've just been taking from there. That's like the savings pot, taking from there. But I've got other little things, you know, I've got little shares here and all. So I've got other little things in the background which I don't even look at, but because I've been moving mad on some essentials with the credit card, I've been taking from that pot of secondary income. Typically speaking, I wouldn't normally take from there. I just know what I've got on my main salary. You've taken everything, whatever I've got to work with, we work with that. Yeah.
I was going to say what I've probably mentioned before is from time ago, or I'll say time ago, from a good few years ago now, I read a book called The Richest Man in Babylon. And that kind of set me on my path of financial literacy in terms of how to budget, which has been really helpful. So I go about it by, I pay myself first. And when I say I pay myself, I'm self-employed anyway, so I pay myself anyway. But in terms of before I pay any bills, before I pay anything, I pay myself 10% of whatever I've made, and I save that.
Got you.
That gets saved regardless. Well, I try to most months anyway, but 9 times out of 10, I pay myself first. Then how it should be in terms of how it's outlined in the book is 10, 10, 10, 70. So 10% is to pay yourself. So you pay yourself and you put 10% to invest in something in terms of whether it's stocks and shares, or you may give it to someone that you're investing in. So you're going to get your money back in one way or another. And another 10% is to give the money away. So it's like tithing. I haven't been so good at that recently for a while, I'll be honest, but I still give money away to someone that I may meet, and they ask me for money, whether it's someone on the street or whatever, whatnot. You know, you get them kids that sometimes, can you buy this magazine? We're doing this about knife crime. Or whatever. So I might just give them a £5, keep the magazine, whatever, whatnot. Then the 70% is to pay for your bills and whatever, what have you. So that's how I currently do it.
Okay, that's interesting, because some of that I automatically do. So with the company I work for, before the salary hits my account, a percentage goes out towards stocks and shares within the same company. So that's one thing. And then obviously, in some way, not that I do the 10-10-70, but it's almost like I've inadvertently set up that have a system kind of running that way. And I'll see a godson and just drop him a 40. Do you know what I'm saying? And not even, it's just, that's my godson I haven't seen for a while. To hold that. So I know you're not going to go and not rob, but you know what I mean? You know what I'm saying? Anyway, let's move on.
All right, let's move on.